Hello and welcome to NDTV Profit. You're watching this special, and my guest today is the chairman of world's fourth largest insurer, Life Insurance Corporation of India, Siddhartha Mohanty. Sir, thank you very much for joining us on NDTV Profit. Let me start off with the initiative that you've taken in the last 2 to 3 years, how you've changed the product mix, non-par being 10% at the time of IPO to now almost 18% which has come in. How do you plan to take this ratio further? Because that's how you've been able to get more out of it by increasing the non-par schemes.
You see, post-listing, we went to market in May 2022. We are listed. So after that, there has been a directional change in our approach to marketing, to product mix. We launched new products in non-par segment. If you remember, in 22 March, it was 7.12% share of non-par to total AP.
That's right.
It went up to 8.89 in 23 March. And today, 24 March, it stands at 18.32%. So non-par share to total AP is 18.32%. And going forward, definitely, our target will be to take it forward to 20-25%, but it will take some time. But every year 2 to 3% growth in this segment I foresee.
At the time of IPO, you said that you have a plan of 3 to 5 years when you would go to.
But before that,
and within 2 years you have already achieved 18%. So are we to assume that you will be aggressive in pushing non-par products in the next couple of years?
Not necessarily aggressive, but focus will be on non-par, but at the same time focus also will be on par products, because we cannot ignore that is the major segment. Though non-par share will grow, but par segment should also grow. Share of non-par will grow, but growth in par segment should also be there. So that should be our focus to make a good balance.
Since IPO you have only launched non-par products. That's the reason I was asking that, the focus has been directional to increase the non-par, and you've been able to achieve 18% now, and you're saying that you should be able to take it to 22%. Is there a timeline for that? In
2 to 3 years time, because whatever we give commitment, before that we achieve. Last 2 years you must have observed.
Yeah.
Whatever we commit before that, we deliver. So,
sir, your revenues, premium, which you have, it was flat year on year. You've been saying that now the concentration would be on increasing revenue, at the same time maintaining margins or increasing the VNB margins, which is there. How do you plan to do that?
You see, focus post-listing, our focus was on profitable growth, not growth per se or market share per se. So when we talk of profitable growth, so focus is on quality, retention, persistency, quality product. So if you see all these parameters, those have improved. Persistency has improved. As a result, margin and all those things, we could get all those in last year. And coming years, definitely focus will be to retain profitability, but at the same time, whatever slight shortfall is there in market share, that also we want to regain that.
And what is the kind of growth that you're looking for in revenues in FY25?
At least we expect a double-digit growth should be there, minimum double-digit growth in the coming year.
FY24 you ended VNB margins at 16.8.
16.8, 60 basis points.
60 basis point, which is there. But Q4 it was lower year to year. I guess that was because of the product which was there in last
margin
Q.
was more. Q4 margin 19 point something, yeah.
And it's now 17%.
Yeah.
The aim is to go up to 20-25%. 5%.
We should be at par with industry. If you see our private peers, their margin. So slowly we should achieve that.
And this mix change, which will be responsible for that going forward?
Absolutely, product mix is responsible, and I must thank our marketing distribution people, agents and all people. So they also promote this product, and customers, we get very good response for these products in our customer segments.
Sir, 16.8 you ended the year, but 17.2 was a Q4 number, and Q3 it was 19 plus, which was there, which basically means that you can hit 20% if the product mix is right?
Absolutely.
So is FY25 be the year that you may look at hitting 20%?
Obviously, at least a 2 to 3% growth in margin I foresee.
Give me a sense of how you want to expand your product profile. You spoke about the fact that you want to enter health insurance. For the first time I heard LIC talking about inorganic growth. Give us something on how you plan to do that.
You see, health insurance space that is under-penetrated. A lot of scope is there for health insurance. I think total health insurance out of total health expenditure and health insurance coverage will be, I think, less than 3% in India. So a lot of scope is there, and we have some experience in health insurance products. We sell fixed benefit product, health insurance product. We have product, but coming to indemnity product like Mediclaim and other, definitely we'll go for that, and a natural choice will be for everybody that LIC should be in this space, health space. And for that already some work internally we are working, because tomorrow composite license may come. So we are prepared, and both organic and inorganic, both we are exploring. So which will be best suited for LIC, looking to LIC's appetite and all other risk factors. We'll go for that.
The excitement was on inorganic growth, because you mentioned inorganic growth.
Absolutely.
So players in private sector are open, and public sector also. Public sector is a general insurance companies, but in private sector you have 6 or 7 core health insurance companies. So are you open to?
We are open to any inorganic growth amongst any player,
including public sector.
Public sector, of course. That is at that time nothing has been decided, but we are open to all.
Sir, investment in equity 1.3 lakh crores, that's what you did last year. It was flat year on year, 1.3 lakh crore last in FY23 and 24, almost same. How do you see this investment growing? Because you have
booked a huge profit. We booked because the market was very high. So we had a good profit last year, equity profit.
And do you plan to increase the equity investment into the market?
Equity investment depends upon market cycle and all those factors.
Because LIC has always been a contrarian.
Yes.
So
now market is very high, so accordingly we invest.
Do you think valuations are very high at this point in time?
You cannot say exactly, but market is good, performing well. So
because your yield were very high. I mean, 8.9%, 93%, which is there. Is it sustainable at this point in time?
No, definitely. I think going forward, because next 10 years, if we talk of macro level, economy, India and growth story, at least next 10 years, one can predict, one can foretell it is India growth story. So LIC will be a significant player in this India growth story. And will definitely sustain whatever we have delivered in coming days. Also will sustain that. We may improve upon that, but minimum will sustain that.
Sir, one area which is very close to you is the agency. You've been talking about revamping the entire agency model because banca is not working properly, and there may be changes going forward in the banca. What kind of transformation are you looking at the agency model?
See, agency is our strength. 96% business we still get from agency, though banca is growing. Other channel, digital also, we are focusing on digital. There is some growth in those space, but those will take time. Since agency is our strength, we want to strengthen it further. We want to enhance the competency of our agents. We want to make them tech enabled. Because last year our agents completed more than 11 lakh policies, 11 lakh 58,000 policies through Ananda mobile app. Means it is totally paperless. Customer is having his mobile smartphone, agent having smartphone, both are in their respective places in a matter of 10 to 12 minutes. Starting from customer onboarding, eKYC verification, NEFT, RTGS payment, underwriting, receipt issue, policy issue. everything matter of 10 to 12 minutes. We completed last year 11,58,000 policy. Now this has further we have improved. Now we have already started our more than 1,000 policies we have completed in matter of 5 to 6 minutes through this mobile app. It is absolutely paperless, no wet signature, no paper, no wet signature. Even afterwards also we'll never ask. So we want to scale it up. Every year we sell more than 20 million policies. So as against that, just 6% we completed. 12 lakh means just. So definitely there is scope for further digital improvement.
So many insurance companies
Total
policy is 11 lakhs in a year.
Yeah.
So how scalable is this model for you? Means is it are you able to penetrate the far east or tier 2, tier 3 cities through this Ananda app? How successful?
No, actually, focus is to increase it. This percentage should go up because if you see, we represent entire India. Our Salesforce agents, they are from various strata of society. So suddenly it will take time, but definitely focus will be there to increase it at least to 25%, 30% like that, so that it goes up year after year. And once our digital transformation project is totally placed, implemented, there will be definitely uptick in that.
So my final question to you is, and I'm running out of time because you are also, you have a flight to catch. You have taken certain charges in this financial year with respect to wage, pension, arrears, which is there. Can you explain to us how you have taken it?
Actually, all those every 5 years there is wage revision for LIC, and every year we provide for that. We expect that certain increase will be there. We have provided for that, and whatever additional is there, some additional is there. So that for that we have taken permission from regulator to amortize it over next 3 years. Next 3 years that will be amortized. But all those things have been factored in, particularly pension liability, which is futuristic. So that has to be factored in year after year. For that you cannot do previous provision, all those things. So all those have been taken care of, and whatever PAT you say, that has also taken care of everything, net of that.
Sir, final question to you. In the last 2.5 years since your listing, you have introduced products which have plugged the gaps compared to your competitors. Where do you see that gaps are existing now, and how do you plan to be on the front foot? Because one of the things which you told me was to regain the market share, marginal market share loss that you had this year. You want to regain it back to go above 60%. How do you plan to do that, and which are areas which you think where you can come in?
We have identified certain segments for which special products are to be launched. Some segments are there. So for that already work is going on, and in the current year we will be launching some 2-3 products for those segments, and that will help for total top line.
Mr. Mohanty, thank you very much for joining us on NDTV Profit today.
Thank you very much.